Let's get to the single best chart now, showing here the Bloomberg Dollar Index over a 14-day period here, looking at over 6 or 7 years. And you see it here, Michael Shaul, almost passing this 30-point oversold indicator here. Let's talk a bit about dollar weakness and the degree to which that's driving things. You said enjoy the good times here. Could this be a sign, could dollar weakness, persistent dollar weakness, be a sign here that a correction may be imminent?
Well, I think the dollar is weakening. I think that's it's going to change financial flows. It doesn't in itself mean that we have a correction coming, but I think one of the assumptions people had at the beginning of the year was that the dollar would be a source of positive returns. It hasn't been. I don't think it's going to be. And, I think that at the margins, liquidity is going to be leaving U.S. financial markets and moving abroad. So I think this talks about, at this point, global outperformance. Later on, at some point in time, if you had a disorderly decline in the dollar, I think that is something the markets could start to worry about. But the most important thing to realize is the dollar is no longer going up. And that assumption that people had that you had to maximize dollar ownership really has been mistaken this year.
Will it be slow or will it be abrupt, this decline of the dollar?
I think so far it's been slow. I think at some point in time when people really cotton onto it, that's when it really starts to accelerate, and that's where you see an RSI chart like this get down into sort of deeply oversold levels. So far, it's been a fairly orderly decline. My guess is we're probably overdue a bounce in the short term, but I think we will have a period of more abrupt withdrawal of capital away from U.S. financial markets at some point in the next 12 months.